Many people struggle with money, not because they don't earn enough, but because of repeated financial mistakes. These habits can quietly drain your wealth and keep you stuck in a cycle of poverty. In this video, we'll explore the most common money mistakes that keep people poor, and more importantly, how you can avoid them. Whether you're just starting your financial journey or looking to improve your current situation, understanding these pitfalls is the first step toward financial freedom. Let's dive in and learn how to break free from the habits that hold you back. One of the most common money mistakes is living beyond your means. This happens when you consistently spend more than you earn, often relying on credit cards or loans to fill the gap. Over time, this leads to mounting debt and financial stress. To avoid this, it's crucial to track your income and expenses, set realistic budgets, and resist the temptation to keep up with others' lifestyles. Remember, true wealth is built by spending less than you make and saving the difference. Start by reviewing your monthly expenses and identifying areas where you can cut back. Another mistake that keeps people poor is neglecting to build an emergency fund. Life is unpredictable. Unexpected expenses like medical bills, car repairs, or job loss can happen at any time. Without savings, you may be forced to rely on high-interest debt, which can quickly spiral out of control. To avoid this, aim to set aside at least 3 to 6 months' worth of living expenses in a separate savings account. Start small if you need to, but make regular contributions a habit. Over time, your emergency fund will provide a safety net and peace of mind. Failing to track your spending is a silent money mistake that can sabotage your financial goals. When you do know where your money goes, it's easy to overspend on small, unnecessary purchases that add up over time. To avoid this, use budgeting apps or simple spreadsheets to monitor your daily expenses. Review your spending regularly and look for patterns or areas where you can cut back. Being mindful of your spending habits is a powerful step toward taking control of your finances and building wealth. Credit cards can be useful tools, but relying on them for everyday expenses is a dangerous habit. High interest rates and minimum payments can trap you in a cycle of debt that's hard to escape. To avoid this, use credit cards responsibly. Pay off your balance in full each month and avoid using them for purchases you can't afford. If you already have credit card debt, create a repayment plan and stick to it. Remember, credit cards should work for you, not against you. Impulse buying is a common money mistake that can quickly drain your bank account. Retailers use clever marketing tactics to encourage spontaneous purchases, but these often lead to regret and financial strain. To avoid impulse buying, make a shopping list before you go to the store and stick to it. Give yourself a cooling-off period before making non-essential purchases. Ask yourself if you really need the item or if it's just a fleeting desire. Practicing mindful spending can help you keep more of your hard-earned money. Many people avoid investing because they think it's too complicated or risky. However, neglecting to invest is a mistake that can keep you poor in the long run. Inflation erodes the value of your savings over time, but investing allows your money to grow and work for you. Start by learning the basics of investing and consider low-cost index funds or retirement accounts. Even small, consistent investments can add up significantly over the years. Don't let fear or lack of knowledge hold you back from building wealth. Without clear financial goals, it's easy to drift through life without making real progress. Setting specific, measurable goals gives you direction and motivation. Whether it's saving for a home, paying off debt, or building retirement savings, having a target helps you stay focused and disciplined. Write down your goals and break them into actionable steps. Review your progress regularly and adjust as needed. Remember, a goal without a plan is just a wish. Financial literacy is a key to building wealth, yet many people neglect to educate themselves about money. Relying on outdated advice or ignoring financial education can lead to costly mistakes. Take the time to read books, attend workshops, or follow reputable financial experts. The more you know, the better equipped you'll be to make smart decisions and avoid common pitfalls. Remember, knowledge is power, especially when it comes to your finances. It's easy to focus on big-ticket items and ignore the impact of small, everyday expenses. However, these small costs, like daily coffee runs or frequent takeout, can add up to significant amounts over time. To avoid this mistake, Track even your minor purchases and look for patterns. Consider making small changes, like brewing coffee at home or preparing meals in advance. These adjustments can free up money for savings or investments and help you reach your financial goals faster. Many people accept bills and service charges at face value, missing opportunities to save money. Whether it's your phone plan, insurance, or subscriptions, there's often room to negotiate for better rates. Don't be afraid to ask for discounts or shop around for better deals. A few phone calls or emails can lead to significant savings over time. Remember, every dollar saved is a dollar earned. Get-rich-quick schemes promise easy money, but often lead to disappointment or even financial loss. These scams prey on people's desire for fast wealth, but true financial success takes time, discipline, and effort. Be skeptical of any opportunity that sounds too good to be true. Do your research and focus on proven, long-term strategies for building wealth. Remember, if it was that easy, everyone would be rich. Retirement may seem far away, but failing to plan for it is a costly mistake. The earlier you start saving, the more time your money has to grow through compound interest. Take advantage of employer-sponsored retirement plans or open an individual retirement account. Even small contributions add up over time. Don't wait until it's too late. Start planning for your future today. Insurance is often overlooked, but it's a crucial part of financial planning. Without adequate coverage, a single accident or illness can wipe out your savings and leave you in debt. Review your insurance policies regularly, health, auto, home, and life, to ensure you're adequately protected. Shop around for the best rates and coverage. Remember, insurance is about managing risk and protecting your financial future. Emotional spending, buying things to feel better or impress others, can sabotage your finances. Marketers know how to trigger emotional responses that lead to impulsive purchases. To avoid this, recognize your emotional triggers and develop healthier coping strategies. Practice mindful spending and focus on your long-term goals rather than short-term gratification. Remember, financial decisions should be based on logic, not emotions. Subscription services are everywhere, from streaming platforms to meal kits. It's easy to lose track of what you're paying for each month. Unused or forgotten subscriptions can quietly drain your bank account. Review your subscriptions regularly and cancel those you no longer use or need. This simple habit can free up money for more important financial goals. Money can be a sensitive topic, but avoiding conversations about finances with family or partners can lead to misunderstandings and conflict. Open communication is key to making joint financial decisions and avoiding costly mistakes. Schedule regular money talks, set shared goals, and be honest about your financial situation. Working together can strengthen relationships and improve your financial health. Paying full price without comparing options is a mistake that can cost you over time. Whether you're shopping for groceries, electronics, or insurance, take the time to compare prices and look for deals. Use price comparison websites or apps to find the best value. A little extra effort can lead to big savings in the long run. Your credit score affects your ability to borrow money, rent an apartment, or even get a job. Ignoring your credit score or failing to manage it can limit your financial opportunities. Check your credit report regularly, pay bills on time, and keep your credit utilization low. Good credit opens doors and saves you money on interest rates. A budget is a roadmap for your money, helping you allocate resources and avoid overspending. Without a budget, it's easy to lose track of your finances and fall into debt. Create a simple budget that outlines your income, expenses, and savings goals. Review it regularly and make adjustments as needed. A budget gives you control and clarity over your financial life. Compound interest is one of the most powerful tools for building wealth, yet many people underestimate its impact. By reinvesting your earnings, your money grows faster over time. Start saving and investing as early as possible to take full advantage of compounding. Even small amounts can grow significantly if given enough time. Don't delay. Let compound interest work for you. Trying to manage complex financial matters alone can lead to mistakes. Don't hesitate to seek advice from financial professionals, especially for major decisions like buying a home, investing, or planning for retirement. A qualified advisor can help you avoid costly errors and create a strategy tailored to your goals. Investing in good advice can pay off in the long run. Relying on willpower alone to save money can be challenging. Automating your savings ensures that a portion of your income is set aside before you have a chance to spend it. Set up automatic transfers to your savings or investment accounts. This simple step makes saving effortless and helps you stay consistent with your financial goals. Taxes can take a big bite out of your income if you don't plan ahead. Failing to understand tax deductions, credits, or retirement account benefits can cost you money. Take the time to learn about tax strategies that apply to your situation. Consider consulting a tax professional to maximize your savings and avoid surprises at tax time. Financial fraud and identity theft are growing risks in today's digital world. Failing to protect your personal information can lead to devastating losses. Use strong passwords, monitor your accounts regularly, and be cautious with sharing sensitive information online. Consider using credit monitoring services for added protection. Stay vigilant to keep your money safe. When your income increases, it's tempting to upgrade your lifestyle immediately. However, failing to adjust your spending habits can prevent you from building wealth. Instead of spending more, use extra income to pay off debt, save, or invest. This approach helps you make the most of your financial gains and avoid lifestyle inflation. Carrying debt without a clear repayment plan can keep you trapped financially. High-interest debt, like credit cards, can quickly become overwhelming. Create a strategy to pay off your debts, starting with the highest interest rates. Make more than the minimum payments whenever possible. A structured plan helps you become debt-free faster and saves you money on interest. Inflation slowly erodes the purchasing power of your money. If your savings aren't growing at least as fast as inflation, you're effectively losing money over time. Invest in assets that have the potential to outpace inflation, such as stocks or real estate. Regularly review your financial plan to ensure your money is working for you. Putting all your money into one investment is risky. Diversification spreads your risk and increases your chances of long-term success. Invest in a mix of assets, such as stocks, bonds, and real estate. This approach helps protect your portfolio from market fluctuations and unexpected losses. Strict budgets that don't allow for any enjoyment can be hard to stick to. Not setting aside a small amount for fun or leisure can lead to burnout and overspending later. Allocate a portion of your budget for entertainment or hobbies. This balance helps you stay motivated and enjoy life while still reaching your financial goals. Regularly reviewing your financial progress is essential for staying on track. Without check-ins, it's easy to drift away from your goals or miss opportunities for improvement. Set aside time each month to review your budget, savings, and investments. Celebrate your successes and identify areas for growth. Consistent reviews keep you accountable and motivated. Lending money to friends or family without clear boundaries can strain relationships and your finances. Set clear rules about lending and borrowing, and don't be afraid to say no if it jeopardizes your financial health. Protect your own stability first and offer help in ways that don't put you at risk. Neglecting your health can lead to expensive medical bills down the road. Investing in preventive care, healthy habits, and adequate insurance can save you money and improve your quality of life. Don't put off doctor visits or ignore symptoms. Your health is one of your most valuable assets. Protect it. Making large purchases without planning can lead to debt and regret. Whether it's a car, vacation, or home appliance, take the time to research, save, and compare options. Set a budget for big expenses and avoid impulse decisions. Planning ahead helps you make smarter choices and avoid financial setbacks. Teaching children about money from a young age sets them up for future success. If you neglect this, they may repeat the same mistakes you've made. Involve your kids in budgeting, saving, and spending decisions. Use everyday moments as teaching opportunities. Financial education is a gift that lasts a lifetime. Failing to plan for what happens to your assets after you're gone can create confusion and hardship for your loved ones. Create a will or estate plan to ensure your wishes are carried out and your family is protected. Consult a legal professional to make sure everything is in order. Planning ahead brings peace of mind for you and your family. Relying on a single source of income is risky. If you lose your job or face unexpected expenses, you may struggle to stay afloat. Explore ways to diversify your income, such as side hustles, freelance work, or investments. Multiple income streams provide security and accelerate your path to financial independence. It's important to acknowledge your progress, no matter how small. Not celebrating financial milestones can make the journey feel endless and discouraging. Take time to reward yourself for reaching savings goals or paying off debt. Positive reinforcement keeps you motivated and makes the process more enjoyable. Many people accept their salary without ever negotiating for more. Not asking for raises or promotions can limit your earning potential. Research industry standards, document your achievements, and confidently advocate for yourself. Increasing your income is a powerful way to improve your financial situation and reach your goals faster. There are many tools and apps available to help you manage your money more effectively. Not taking advantage of these resources can make financial management harder than it needs to be. Explore budgeting apps, investment platforms, and financial calculators to streamline your process and make smarter decisions. Everyone makes financial mistakes, but not learning from them can keep you stuck. Reflect on past errors, identify what went wrong, and make a plan to avoid repeating them. Growth comes from experience and self-awareness. Use your mistakes as stepping stones to a stronger financial future. Surrounding yourself with supportive, like-minded people can make a big difference in your financial journey. Not having a support network can leave you feeling isolated and discouraged. Join financial communities, find accountability partners, or work with a mentor. Sharing your goals and challenges helps you stay motivated and learn from others. Focusing only on what you lack can lead to dissatisfaction and poor financial decisions. Practicing gratitude for what you have helps shift your mindset and reduces the urge to overspend. Take time each day to appreciate your progress and the resources you already possess. A grateful mindset supports healthier financial habits. Giving back, whether through donations or volunteering, enriches your life and community. Not making room for generosity can limit your sense of fulfillment and connection. Even small acts of giving can have a big impact. Include charitable giving in your budget and look for ways to support causes you care about. Avoiding these common money mistakes is the key to breaking free from financial struggles and building a secure future. Remember, it's never too late to start making better choices. Review your habits, set clear goals, and take small steps every day toward financial health. With awareness and discipline, you can overcome the patterns that keep you poor and create the life you deserve. Start today. Your financial freedom is within reach.